From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Nice to be with you this Thursday as we see a very solid session in the equity market. We knew we were up for a good day when we saw that cooler than anticipated US inflation data pointing to the fact that the Fed is likely to remain on its rate cutting path this year. We also had some good leads coming through from the start of banking earnings season and all the commodity moves working in our favour as well. So that is contributing to a positive session. You can see there the CBO 200 is up by 1.2%. The ASX 200 up more than 100 points or 1.3% to 8,323. It is crossing above its 50-day moving average. Bringing us to what we saw today in terms of that broad-based rally really across all sectors. I'm just looking now on the ASX sectors, and in fact, I think it's only utilities that is in the red. We also had the bumper jobs report, always a very volatile series, but more than 50,000 jobs created in December. Of course, a lot of that seasonal due to the fact that you do actually see retailers, for example, put on more staff over Christmas. But still, it was well above expectations of a gain of 15,000. The fact that the number of unemployed also rose, did see the unemployment rate tick up to 4%. But Bjorn Jarvis from ABS telling us, look, there was nothing dramatically in that is likely going to move the RBA's hand. HSBC saying the jobs data does not scream rate cuts in their opinion. But Billy Leong from Global X did put a note out saying he still thinks that the RBA will cut in February. And of course, we're banking on the banks. We mentioned the solid news coming through from some of those big giants on Wall Street overnight. JP Morgan reporting a record annual profit in the fourth quarter. And we're continuing to see very solid moves coming through from our banks, even though everyone pretty much on the street says that they should be a sell. People are still buying in some very big moves today, particularly from index leader CBA. Let's have a look then at the sectors and kick it off with the banks and see where CBA tracking 2.5% gain today, $155.41. ANZ and NAB both up by close to 3%. Also looking at some of the tech players, Zip was a standout today, up 9%, WiseTech Global up by 2%, and of course the heavy lifting done by the materials sector as well. Although Rio Tinto kind of petered in the afternoon session, BHP up just 0.25% and Fortescue getting back close to that $19 level. Mineral Resources was a laggard today. Looking at some of the corporate stories, we mentioned Rio. It reported a 1% decline in iron ore shipments during the fourth quarter of 2024, partly due to unusually heavy rainfall, which impacted its Pilbara operations. We also heard from Pro Medica signing a $33 million contract with the University of Kentucky as part of its expansion strategy in North American academic institutions. Tabcorp was a front runner, up almost 6%. It's appointed the Hong Kong Jockey Club executive Michael Fitzsimmons as its first chief wagering officer. And we also mentioned Zip doing well after its US competitor Sezzle upgraded its revenue guidance overnight, saying it would exceed its 55% revenue growth target for 2024 because of, quote, exceptional holiday demand. And MLG Oz jumping by more than 11.5% after Northern Star announced it had contracted the mining services provider for haulage and site services, and MLG says that could provide it around $45 million in revenue. Well, let's get his take on market action, and welcome to the COB, Jimmy Jang from Macro. Good to see you, Jimmy. So a bit of a sigh of relief from investors about that US inflation print.
Afternoon. Yeah, of course. I mean, we saw that big rally that we've seen in the US, but obviously one of the key focus that we need to really kind of maintain and keep on really close eyes on is the inflation. So obviously the Fed is still kind of giving that stance of being a little bit cautious with the inflation still being quite not as expected as what they want to achieve. And obviously, with the solid core CPI data, we saw the market had a different idea. But obviously in Australia, as you mentioned, Juliette, we saw that 56,000 jobs being added in December, which exceeded that 15,000 expectation forecast. And the jobless obviously being at 4%. So RBA is now looking a little bit more kind of holding off in potentially cutting rates for now, especially in Australia, to see how that will kind of play out. But it was interesting to see that the probability of a 25 base point of a Fed rate cut in July rose to about 107% now from 83%. So we've seen that strong conviction of the market pricing in that we might potentially see another rate cut. But our key focus internally right now that we're a bit concerned of is the budget deficit that we're seeing in the US, which is kind of adding that more inflationary pressure that we're seeing at the moment. So the global growth right now is looking a little bit more sluggish than we anticipated for the start of the year. To give you an example, over in Europe, things are obviously very stagnant, with obviously the energy policies making that industries are quite less competitive. And in Asia, more focused in China, is obviously still grappling with the deflation, which they haven't really kind of introduced any kind of new kind of fiscal stimulus that kind of really needed to get the consumer spending going. So across the board, quite with caution, we're seeing a bit of a stagflationary environment. Obviously, that's a high inflation combined with that weak economic growth. So it's a tough mix for not just the policymakers in the US and Australia, but just around the globe to kind of see how they will navigate. So we've got to be a little bit cautious at this kind of stage.
All right. And what is the bond market telling us in terms of potentially some skepticism here, given what you're seeing with yields and what the dot plot tells us about the Fed?
That's a very good point, Juliette. It's very quite telling. So around since September, the Fed has already obviously cut rate by 100 basis points, but the yield on the 10-year Treasury has actually gone up by the same amount. Now, that gap shows a lack of trust in the Fed strategy, with obviously market pricing in that persistent inflation and really questioning the effectiveness of the rate cut. So how that kind of all ties back to equities is the big question is the valuation. So the US equities right now is looking really pretty stretched. With the S&P's cyclical adjusted P ratio is sitting at around 38 times. So a lot of the market's performance right now in the US is very concentrated in just those 10 mega cap stocks, which makes things a lot more vulnerable. So the initial optimism on top of that, after the Republicans' victory in the midterms, has also kind of cooled off as well. So and that's largely because the people in the US as well as Australians are also realizing that the fiscal deficits in the US could really limit the government's ability to boost the growth. So fundamental is probably a big focus right now internally as well, is if we see, no matter how the share prices are doing at the moment due to the current reporting, if the outlook in the next 2025 to 26 is not looking positive due to that physical deficit, that's going to really limit the government's ability to boost the economic growth, it's a big red flag for a lot of equities at the moment.
All right, where are the green flags, Jimmy? Where are you looking for some opportunity?
Like you kind of mentioned briefly earlier, the rate cut that we might see in Australia is still looking quite positive. We might definitely see a rate cut this year close to about 50 basis point. Now, some of these rate sensitive sectors like REIT, for example, is looking really attractive. So at the moment, the yields that a lot of REITs are offering right now is between 4.5% to 6.5%. And we have a conviction that, first of all, I think everybody knows in the market the banks are very overvalued at the moment, and that's largely because of a lot of these minerals sector is really struggling to keep their investors, and a lot of inflows from the mineral sector is now flowing towards the financial. And we have a conviction that a lot of those funds that's tied up in the banks might flow back down into the real estate, because the real estate is looking really positive in terms of the outlook for Australia. So if we see that potential rate cut happening even further in Australia, contrary to what the market expected right now, then we're going to see a faster growth in the REITs. And at the moment, REITs has been hammered pretty hard. So we have a really great value in the listed REITs like Mirvac, for example, that's been our core holdings for a while now, and also Charter Hall as well is looking really good. And they all kind of yielding around that 4.5% to 6.5% as well. And we're seeing some really good stories that's in the REIT right now. So for example, the Jennings potential takeover is also kind of looking really positive for the REIT. And also we saw the recently Stockland also acquired 12 land lease communities, which means that Stockland now holds the largest land bank in history. So there's a lot of great stories behind REITs at this stage. That's something we can't really find in, let's say, materials or the financials. So I think the REITs at the moment is looking really positive and really good and very fairly valued is probably the main focus.
All right, Jimmy, always good to chat. thanks so much. Have a good afternoon. Jimmy Jang there from Macro with us. Well, the stock of the day was Genesis Minerals, ticker code GMD. Jonathan Takadina from MPC Markets and Ben Clark from TMS Capital joined Andrew.
They're great operators. They've had some ambitious plans and they've exceeded them with this reporting today. So yeah, it's a buy for me. I'm still bullish the gold price as the self-proclaimed gold bug of AusBiz. Obviously Trump and his spending. We'll see what happens when it comes in. But I just think overall gold is still a great store of value. These guys are great operators, so it's a buy for me.
Look, I do agree that gold has proven to be a pretty good storage of value and a good inflation hedge over time. These guys seem to, as Jonathan said, they seem to be good operators. It's important when you're a miner to control what you can control, because there's a lot of components you can't control, such as the gold price and geological and all these sort of things. But they seem to be in a production upgrade cycle. They seem to be good cost managers, which is very important.
All right, a great day on the market. Let's have a look at some of the leaders of the pack. Neuren Pharmaceuticals basically reversing its recent losses, rising 11%. Zip, of course, we mentioned the news after Sezzle in the US, lifting its share price by 9%. Corporate travel also looked good today, up 7%. Tabcorp up by 6%. It's got a new chief in terms of someone from the Jockey Club. We touched on that earlier. And Emerald Resources up almost 6%. All right, let's have a look at the laggards today. Switching out of Domino's with a 2% loss. Mineral Resources we touched on down by 2%. And there was also weakness in Sims Metal, Ramsay Health and Monadelphous. In the small end of town, Tivan had a good session, up by 13%. MTM Critical Metals, of course, this is all on these WA cash splash that we are seeing boost a lot of these players. Lindian Resources, WA Gold and Meagre Metals. On the laggard side, in the small end of town, these stocks including Energy Transition, which fell by 12.5%. Having a look at what we are expecting tonight, we get retail sales coming through from the US, also import and export prices for December, and the NAHB Housing Market Index for January. Looking ahead to tomorrow, we've got Lynas with its quarterly report and a PMI read out of New Zealand, expected to be fairly quiet though in terms of market moving data as we close out the week. Let's have a quick look at where the market is tracking as we finish out the day's trade. The CBO 200 up 1.2% and the ASX 200 finishing the session higher by 1.4% or 113 points to 8,327. We mentioned there were pretty much no weak spots today, and in fact all 11 sectors have ended higher. Financials, the best performer, up 2.6%. So continuing to buy into those banks no matter what the analysts say. CBA was up 2.6% today. Well, our first investor event for 2025 is happening this month, January 30th. Time to get it into your diary. High Conviction is a selection of the best ideas for this year across public and private markets. We will have some of the country's top investors with their high conviction concepts, whether they be themes, strategies or individual stocks. Now, registration is free. You can get all the details at ausbiz.co/conviction. That does it for this Thursday here at AusBiz. We'll be live from 9:45 a.m. Eastern tomorrow. We'll see you then.